Vedanta Limited has launched its $800 million QIP, which includes the base issue of around $600 million with $200 million of a green shoe option. The timing is perfect. The globe braces for rate cuts, which will result in a softer dollar, and it served as a booster shot for base metal prices. And so in that context, Vedanta is perfectly placed. Well, what can Vedanta use these funds for? Well, they can use the funds for its ambitious growth capex of around $3.5 billion, which has been lined up over the next 2 years. It can also look at retiring the high-cost debt and ultimately make a bit of a pitch for its rating upgrades. Let's see whether or not that happens. Well, the QIP entails a dilution of around 3 to around 4% on its total equity base, and so the promoter holding will get diluted from around this 59% odd mark as of the last reported number in June 2024. But there will be a lock-in of around 60 days for the promoter entity. Well, the promoter, Vedanta Resources, well, it's in far better shape than what we have seen in the recent past. It's reduced its net debt at the standalone level, and it's well placed to fulfill the $1 billion obligation for this fiscal, that's FY25. How do they do that? Via brand fee payments from Vedanta as well as Hindustan Zinc, the promoter stake sale that just got concluded in the past month, and also the dividend payouts. Some part has been paid and some part is due in the coming fiscal. Well, brokerage firm Phillip Capital, they have given the stock a target price of close to 550 rupees per share. And as the table indicates, well, bulk of this value is coming in from the stake that they have in Hindustan Zinc, which is 65% stake out there, and also its aluminium business. While there is a bit of a negative value that's ascribed to the debt in their books of around 173 rupees odd. But there is a potential upside risk to these estimates on two counts. One is on the net debt. That what they have assumed, well, it could be relatively lower. Why is that? Because of this fundraise and also the healthy cash flows. While the aluminium EBITDA number, that could be relatively higher as well, because they're looking at higher captive sourcing of alumina, coal as well as bauxite, which could lower the cost of production of aluminium by around $250 on a structural basis. Well, the street further expects the demerger to be completed by the end of this fiscal, which could unlock further value for minority shareholders. Well, before we wind up, let's highlight the 3 key risks which could derail this entire bullish outlook. One is the higher debt at the listed entity. Well, if it's used to service the promoter debt, that will be viewed negatively. The second factor is delay in commissioning of some of this backward integration that we're talking about for its aluminium operations. And the third factor is, suppose they invest all this cash that they throw up into a low return asset or an unrelated sector, that in fact will be a bit of a negative. For Vedanta, the ingredients are in place. The question is, will it finally deliver for shareholders?